Very good day to everyone. So ICAI has now released the RTP for September 24 CA Intermediate Taxation exam. And in this video, we are going to look at the reasoning and the logic for the correct answers for case scenarios and MCQs. We are not going to discuss the other questions, only case scenarios and MCQs. And the reason is that the ICAI provides only the final answer, or it identifies just the correct option, and it doesn't provide the working notes. So we will try to understand the logic and reasoning, because several times there may be a doubt as to why an answer is correct and why an answer is not correct. So let's move to income tax law first, and we move to the case scenario. So Mr. Naveen is engaged in manufacturing business and he follows mercantile system of accounting. Details pertaining to his business are as under: capital receipts, turnover, amount received in cash out of turnover, amount received in cash out of capital receipts. And then we have amount received through account paycheck and EFT on or before 139 due date. And then we have total payment, cash payment out of total payments, and here we have net profit as per books of account. Okay, and then there is some information given, and then we have the MCQs. Number 1, is Mr. Naveen eligible to declare income on presumptive basis under the provisions for AY 24-25? So presumptive basis, which section will apply here? 44AD or 44ADA or 44AE? Mr. Naveen is engaged in manufacturing business, so 44AD will apply. And the correct answer is what? It is C. Yes, 44AD will apply since amount received in cash during the year do not exceed 5% of turnover. Now here we need to look at the provisions of section 44AD and who is eligible. What is the eligibility criteria? The criteria is that the total turnover or gross receipts in the previous year should not exceed a limit, and that can either be 2 crore or it can be 3 crore. Okay, and how do we determine that? And this is the recent amendment, Finance Act 2023, and therefore it is important, and that's why it's being asked in the RTP. So amount or the aggregate of amount received, not paid but received, during the previous year in cash mode is more than 5% of total turnover or gross receipts of such previous year. So if cash mode receipts exceed the limit of 5% of total turnover or gross receipts, the limit becomes 2 crore, else the limit becomes 3 crore. Okay. And what is cash mode? Cash mode is not only cash but also check or bank draft, which is not account payee. Okay, so we need to figure out whether the limit of 2 crore will apply in our case or 3 crore will apply in our case. So capital receipt is something that we need not consider. Okay, because we need to consider the turnover, and the cash mode receipts as a portion of the turnover, and we need to check whether that is exceeding 5%. So capital receipt is something that we should not consider, and therefore amount received in cash out of capital receipts is also something that we will not consider. So turnover is 2.8 crore, 5% of this is what? 14 lakh. Amount received in cash out of turnover is 8 lakh, which doesn't exceed 14 lakh, so 5% limit is not crossed. So that means what will be the limit? The limit will be under 44AD, it will be 3 crore. And since the turnover in our case is 2.8 crore, which is not exceeding 3 crore, therefore 44AD can be applied. And therefore the correct answer will be yes, since amount received in cash during the year do not exceed 5% of turnover. Okay. Now we move to MCQ number 2. What would be your answer to MCQ 1, the previous MCQ? And for that we need to assume that for the purpose of answering this MCQ, MCQ number 2 and MCQ number 3 as well, for both these MCQs we need to assume that Mr. Naveen has additionally received rupees 10 lakh by way of cross check out of turnover during the previous year 23-24. Now cross check is not account paycheck, and therefore it forms part of cash mode receipts. So 10 lakh is also additionally received, and this is cash mode received. And the answer is basically D, no, due to both A and B, right? And what will be the position here? So we know that now 10 lakh is additionally received. So 8 lakh was already there, amount received in cash, and now we are assuming that 10 lakh more needs to be added. So this becomes 18 lakh. Okay, So 2.8 crore is the amount of turnover, and 5% was 14 lakh, and 18 lakh now exceeds 14 lakh. So 5% limit is crossed, and therefore the limit in terms of 44 AD will not be 3 crore now, it will be 2 crore now. And now since the turnover of 2.8 CR is more than the limit of 2 CR, 44 AD cannot be claimed. And therefore the correct answer will be D, because both A and B reasonings are correct. What is reasoning number A? It is turnover of Mr. Naveen exceeds the threshold limit of 2 crore, right? That is what we figured out. B is also correct because aggregate cash receipts during the year exceed 5% of turnover. So both because of A and B, the correct answer becomes D. Now we move to MCQ number 3. Is Mr. Naveen required to get his books of accounts audited during the previous year 23-24? Books of accounts audited with section 44AB. And for MCQ number 3, we need to continue with the same assumption that 10 lakh additional has been received by way of cross check. Okay. And the correct answer is C. And how did the correct answer is being arrived at? For that, we need to check the provisions of tax audit. And if you see, this is the chart for tax audit. For person carrying on business, total sales turnover of gross receipts is to be considered, and the limit for tax audit is either 1 crore or 10 crore, and this depends on these twin conditions. If the aggregate of all amounts received, including amount received for sales turnover of gross receipts during the previous year in cash mode, is not more than 5% of the said amount, okay, is not more than 5%, and aggregate of payments made, similar condition for payments as well, aggregate of all payments made including amount incurred for expenditure in cash mode during the previous year is not 5%. If both this and this gets satisfied, then the enhanced limit of 10 crore applies, else the limit for tax audit becomes 1 crore. So we need to check in our case whether 1 crore is applicable or 10 crore is applicable. Okay, and here therefore what we need to check is the aggregate, and the details which are given here, they pertain to the business. So since the aggregate of receipts, all the receipts and all the payments are to be considered, capital receipts are also to be considered. Okay, so as far as the receipts go, capital receipts plus turnover, the aggregate of receipts is what? It is 4 CR. It is 4 CR. An amount received in cash, okay, this is 8 lakh, and 10 lakh was additional, so this becomes 18 lakh, and 2 lakh out of capital receipts also needs to be considered, so this becomes 20 lakh. So 5% of 4 crore, it becomes 20 lakh. So this is the exact 20 lakh is the amount which is coming here. So it is not more than 5%. So as far as the receipts are concerned, the 5% limit is not getting breached. Now let's come to the second thing, which is the payment. Total payment is 1.6 CR, and 5% of this is 8 lakhs. But cash payment out of total payments is more than 8 lakh, and therefore this particular limit is getting breached, and therefore the enhanced tax audit limit of 10 crore will not apply. The lower limit of 1 crore will apply, and since the turnover is more than 1 crore, it is 2.8 crore. That means tax audit will be required, and therefore the books of accounts will need to be audited, and therefore the correct option is C, yes, since the cash payments during the year exceed 5% of aggregate payment. Okay. Next, what is the amount of profits and gains of business chargeable to tax in the hands of Mr. Naveen as per books of account? So we are not talking about 4480, because as per books of account, the normal computation will apply, and now we need to see what will be the position. So we start with net profit as per books of account, which is 10.5 lakh. Okay. So we take 10.5 lakh. Okay. And now we look at the three adjustments here. Number one is what? Salary includes wages of 15,000 per month each paid to one security guard and two housekeeping staff in cash. And section 44A3 will be hit here. Payment to a person in a day, exceeding 10,000 rupees will need to be disallowed. Will need to be disallowed as per 48.3, and 15,000 needs, and therefore 48.3 will be hit, and this is for 3 personnel and 15,000 per month. So 15,000 into 3 into 12. So this comes to what? This comes to 5.4 lakh. This will be disallowed under 48.3. Next is other administrative expenses include 70,000 paid in cash once again, but payment in a day is less than 8,000. So while the aggregate is more than 10,000, but in a day it is not exceeding the limit of 10,000, so 48.3 will not be hit, so no adjustment will be required on account of point number 2. Point number 3, interest charges include interest payable on loan to Kamal of 70,000 on which TDS has not been deducted. Loan was taken for business purpose, and since TDS has not been deducted, which section will apply? 40IA, and the disallowance will be to the extent of 30% under that section because TDS has not been deducted. So 30% of 70,000 will be 21,000. So 21,000 will also need to be added. So 10 lakh 50,000 plus 5 lakh 40,000 plus 21,000. So this comes to 16 lakh 11,000. So 16 lakh 11,000 should be the answer. See, this is the correct answer. Okay. Okay, next. What is the amount of profits and gains of business chargeable to tax in the hands of Mr. Naveen if he does not want to get his books of accounts audited? So if he does not want to get his books of account audited, that means he will have to declare income on presumptive basis under 44AD. So basically, under this question, we need to calculate the amount of presumptive income under section 44AD. And how do we do that? So we move to 44AD and we know the formula. So turnover of gross receipts, so basically this plus this is the presumptive income. So turnover in the previous year on account of such business which is received by specified mode during the previous year or before the due date under section 139(1), 6% of such turnover of gross receipts, and for the balance it is 8%. Okay, so going back to the question, amount received through account paid check, NEFT or other prescribed mode on or before 139(1) due date out of turnover is 2.5 crores. So 6% of this, 6% of this. Okay, so 2 crore 50 lakh into 6% is equal to 15 lakh. 15 lakh. Okay, and the total turnover was 2.8 crores. So what is the balance after 2.5 crore? It is 30 lakh. So on 30 lakh it will be 80, on 30 lakh it will be 8%. So 30 lakh 8% is 2 lakh 40,000. So we add 2.4 lakh here and this comes to 17 lakh 40,000. This should be the answer. See, this is the correct answer. Okay, so this brings us to the end of income tax, and now we move to the GST portion and we will look at the case scenario. XYZ Private Limited is a mid-sized company. It is registered in Delhi. Okay, dealing in electronic manufacturing distribution of electronic goods in India, and the company needs to ensure compliance with various regulations, and it is exploring to expand its sales channel in India through distributors in each state. So in each state it has distributors. So the company has undertaken following activities in the month of June, and these are the various activities, and the rate of tax applicable is 18% IGST, 9% CGST, SGST, unless otherwise specified. And now we moved straight away to the question. So question number 1 is, which of the following statements is correct under GST law in relation to the hotel accommodation service received by the company? Received by the company. This is hotel accommodation service, and this is point number A. It organized a distributor conclave in Udaipur, Rajasthan, where the distributors from Rajasthan, Gujarat and Madhya Pradesh participated in the conclave held in Rajasthan. Total cost of hotel accommodation was 25 lakh, which was paid by the Delhi office to the hotel located in Rajasthan. So this company XYZ is registered in Delhi, and there is a hotel in Rajasthan, and the payment is made to the hotel in Rajasthan because there is a distributor conclave which is being held, and the correct answer is the hotel shall charge CGST and SGST in the invoice issued to the company. And what is the logic for that? Okay, CGST and SGST means that basically this is not an interstate supply, it is an intrastate supply. And what is the logic for this? For that we need to figure out the place of supplier and the place of supplier. So the place of supplier is what? It is Rajasthan because the hotel is situated in Rajasthan, which is supplying the hotel accommodation service. And what will be the place of supply in this case? For that, we need to look at this chart pertaining to in place of supply for immovable property lodging. Services by way of lodging or accommodation by a hotel. Okay. Place of supply is location at which the immovable property is located or intended to be located. So the immovable property, that means hotel, is located in Rajasthan, and the place of supply is therefore Rajasthan. The place of supplier is also Rajasthan. So that means it will be a intrastate supply, and therefore the hotel shall charge CGST and SGST in the invoice issued to the company. All other options will be incorrect. Okay. Next question, what will be the place of supply in relation to the gift items purchased by XYZ Private Limited? So XYZ Private Limited has purchased some gift items, and this is point number B. The company purchased certain gift items for what? For distribution to the participants in the conclave. Okay. The gift items were purchased from the vendor located in Ludhiana, Punjab, and were delivered to the hotel in Udaipur, Rajasthan for distribution to the participants of the conclave. The cost of such gift items was 25 lakh. However, the value of individual gift items was restricted to 75,000. So here XYZ is registered in Delhi. The conclave is taking place in Rajasthan, and the gift items have been procured from the vendor in Punjab. And the question is, what will be the place of supply in this particular case? So what is happening is that the company in Delhi has basically purchases from the vendor in Punjab, but instead of asking the vendor to deliver it to XYZ in Delhi, it has asked it to directly deliver it to the hotel in Udaipur, Rajasthan. So what will be the position here? This will be a position of bill to ship to cases, where goods are delivered by the supplier, the vendor in Punjab, to a recipient, hotel in Rajasthan, on the direction of a third person, XYZ in Delhi, whether acting as an agent or otherwise, before or during movement of goods, either by way of transfer of documents of title to the goods or otherwise, then it shall be deemed that the said third person has received the goods. That means XYZ. And therefore the place of supply will be the principal place of business of XYZ, such third person, which is what? Which is Delhi. And therefore what will be the answer here? The place of supply will be Delhi. That is the principal place of business of the company. Okay. Next question, which of the following statements is true in relation to the gift items and the insurance policy purchased by the company? So here we also need to look at point number C. So point number B, we have looked at, it was relating to gifts, and gifts have been procured for whom? For distribution to the participants. Who are the participants? The distributors. Okay, distributors. Point number C, the company purchased an insurance policy for its employees traveling for the conclave. So in addition to distributors, employees of the company are also traveling to the conclave, and for which the company has purchased an insurance policy, and the premium was 1 lakh, which was paid by the company. There is no requirement under any law requiring such insurance policy. Okay, so we are asked as to which of the following statements is true, and basically option A is correct, which is the company is not eligible to avail ITC in relation to both the gifts items and the insurance policy. Now if we look at the insurance policy first, okay, and this is for employees which XYZ has taken. Okay, so these are some of the services for which ITC is blocked. Services in the nature of personal consumption, and one item is life insurance and health insurance. Okay, ITC is blocked. Now assuming that in our question the insurance policy is either life insurance or health insurance, the ITC will be blocked. One exception, okay, there are two exceptions, one of which is where it is obligatory for an employer to provide the same to its employees under any law, but in the question itself it is given that it is not so obligatory, and therefore ITC will be blocked in respect of insurance. Now coming to gifts. Now gifts have been procured for the distributors. It is appearing from the question that it has not been procured for the employees. insurance is for the employees, and gifts are for distribution to the participants, and the participants are distributors. Okay, the employees may have gone there for making arrangements and for organizing. Okay, so as far as the gift is concerned, now ITC will be available if the gift is considered as supply, and for supply consideration is important. But if we look at schedule 1, a transaction can be considered to be a supply even if there is no consideration. So let's see this. In this case also ITC is blocked. Goods lost, stolen, destroyed, written off or disposed of by way of gifts or free samples. So if the goods are disposed of by way of gift, then ITC is blocked, ITC is not available. Okay, free samples and gifts. ITC is not available to the supplier on inputs, input services and capital goods to the extent they are used in relation to the gifts distributed without any consideration. Right? However, the exception is what? Where the activity of distribution falls within the scope of supply on account of schedule 1, then it will be treated as supply and therefore ITC will be available. So what we need to check here is the concept of supply. Now when we look at supply, supply without consideration, here it is a case of gift without consideration, and this is para 2 of schedule 1, between related persons made in the course of furtherance of business will be treated as supply. Okay, so gifts is being given to the distributors, right? And therefore if distributors are related persons, then the gift will be treated as a supply because it is made in the course or furtherance of business. It is a business conclave which is taking place. Now if we look at the definition of related persons, one of the categories is that one is the sole distributor of the other. Sole distributor means there is no one else. The distributor is the exclusive or the sole distributor. But this is not the case in our question. In our question, this is a conclave of distributors in each state. So there are many distributors. Okay. And this is not the case of being a sole distributor. So the distributors in our question are not related persons to XYZ. Okay, they are not related persons, so schedule 1 doesn't apply. Schedule 1 doesn't apply, so it is a case of gift which is not falling in schedule 1 and therefore it is not a supply. Since it is not a supply, what will be the position? ITC will be blocked, ITC will not be available. So what will be the answer? No, the company is not eligible to avail ITC in relation to both gift items and insurance policy. Correct? Next, which of the following statements is correct in relation to the issuance of e-way bill for transportation of goods between factory and warehouse in non-motorized cart? And for that, we need to look at point number D. The company took on rent a new warehouse near its factory in Delhi for storage and dispatch of goods. The goods are being transported between the factory and new warehouse in non-motorized cart. The value of such goods transported in single trip is up to 5 lakh. Okay, for the rent of warehouse is this for initial 11 months and the same shall be revised to 21 lakh after expiry of initial 11 months. Now from factory to warehouse, the goods are being transported in non-motorized cart and therefore the question is whether the e-way bill is required to be issued, and the correct answer is what? E-way bill is not required to be issued irrespective of the consignment value of the goods. Why? Because see, this is the provision of e-way bill, and e-way bill is not required to be generated in certain cases, and one of the cases is very clearly given where the goods are being transported by a non-motorized conveyance, and therefore irrespective of the consignment value, e-way bill requirement will not apply, and therefore the correct answer is B. Let's look at number 5. Which of the following statements is most appropriate in relation to new warehouse taken on rent by the company? And the correct answer is that separate GST registration in NOS is not required mandatorily. That means it is optional, one can take, but it is not required mandatorily. Okay. And what we saw was that the company has taken on rent a new warehouse where near its factory in Delhi. Okay, so the company is already registered under GST in Delhi and now it has taken a new warehouse also. Okay, so what we need to consider here is that new warehouse is a place of business. is a place of business. See, place of business. So there is a place of business which is the factory, which is registered in Delhi, and in the same state which is in Delhi near the factory, there is this additional place of business which has been taken on rent. Okay, warehouse. See, a place from where business is ordinarily carried on and includes a warehouse. So warehouse also becomes a place of business. So now in Delhi, there are two places of business. One is already registered and one has now been taken. And the question is whether mandatory registration needs to be taken for the new warehouse. That means for the new place of business. And therefore, see this provision. Single multiple registration in a state or UT. Although single registration is granted in a state or UT by default, that's why the person XYZ is registered in Delhi. Okay, a person having multiple place of businesses, now there will be multiple, factory as well as warehouse, can be granted a separate registration for each such place of business, for factory as well as for warehouse, but this is not mandatory but optional, subject to certain conditions being met, and therefore it is not mandatory. Okay, so what will be the answer? The answer will be separate GST registration is not required mandatorily. So this brings us to the end of this video. Hope you are clear on the logic and reasoning. Do write in the comment box if you have any questions. Subscribe to my channel, hit the bell icon so that you do not miss out on any important video released from my side. Like this video if you found it useful, and share it with your friends and colleagues so that as many people as possible can take the benefit of the content of this video. So with this, I wish you all the best. Thank you very much. See you very soon in my next video.